Hey everyone, John Henry here, and today in the market psychology video, we're going to be taking a look at a range day. Good old range days. You know me, I love a good range day. And this is just a beautiful example of exactly why it is that we love range days. They are just so predictable. It's just a type of day that you have. Assume that every breakout's going to fail, and even if it does succeed, it always comes back anyway. So essentially, at least for a little bit, every breakout's going to fail, and you're looking to buy low and you're looking to sell high. Yesterday, we ended the day with a range, right? That's just kind of the way that we ended. After that nice rally higher, beautiful movement, keeping the market pinned to the highs, we open up today, immediately fill the gap, and show a very strong bull candle start. Initially, you'd be looking at this thinking, wow, man, we may have another big, strong bull day to get this market going back up again. It might not be a bad idea to think about buying, but it doesn't even trigger in the buy, and it actually goes bearish. By the time they actually turn higher, then they push up into an area of resistance, and we find no follow through again. They can't even trigger above it. Then we go into a doji, and then a weak bull candle, and another doji, and then a bear candle back down again. Now we're starting to see a semblance of a range. Everything is pointing to look to buy low now. We're not looking to sell for a bigger move down. We're looking to sell up here, right? We want to be selling near the highs to get the market to go down to the lows. So we come down to the lows, we fill the gap, massive area of support, and that's also the first time that we've breached a new low underneath that first candle of the day. We're looking to buy there. You're looking to buy that to push the market where? Right back up again towards the highs, and that's exactly where we need to start looking in the opposite direction again and think about selling right back down again. Beautiful smash through the highs of the range, absolutely no follow through. This is actually the trade of the day video off of this area of resistance in combination with this just beautiful sell opportunity to drive the market back down. Huge bull spike higher, no follow through on a range day. You guessed it. We're looking to sell, drive the market back down towards the lows. We get back down towards the lows, we hit the low, we go just underneath that low a little bit, and they can't even close under it before showing a huge bull candle back up. That is a beautiful reason to be a buyer, to shove that market right back up towards the highs. Now, we finally get up to the highs, right? And this is the first time that we've actually seen a breakout that succeeded. We slammed through the highs, closing very aggressively bullish. There will be buyers that will buy that all day, looking for this move to double itself up and continue going higher. But we know that we're in a range. So even if it does continue higher, you have a much higher probability of sellers selling above any attempt from the buyers to drive the market back down. At this point in time, just to come back down to retest that range, because this is a successful breakout. But we still know that the seller's objective is going to be to drive this market down to get a retest of that area before the buyers will think of coming in. And that will be a breakout pullback as well. So this is another sell opportunity to drive the market down to complete that objective. So just a beautiful cyclical rotational type day in terms of a range. You don't get ranges that are this pretty very often. This is the type that honestly you feel like you kind of want to print the chart off and mark it up, because you don't get this good looking of a range very often. So just a beautiful range rotation day. If you have any questions about it, feel free to send us an email. Hopefully you found it useful. Hopefully you learned something, and we'll see you next time.